Taxand Tax Updates. Disclaimer: the following information is intended only to be a guide. It must not be relied on in or applied to specific situations without previously seeking proper professional advice. Tax treatment of joint operations. The government has issued Regulation of the Minister of Finance No. 79 of 2024, or PMK 79 of 2024, regarding the tax treatment of joint operations, or JOs, which will come into effect on October 14, 2024. The issuance of PMK 79 of 2024 is an effort by the government to provide legal certainty, ease of administration, and ease in the implementation of rights and fulfillment of tax obligations for JOs. Based on the provisions of PMK 79 of 2024, the obligation to register a Taxpayer Identification Number or TIN for JOs as a corporate taxpayer in the event of a JO cooperation agreement or the implementing party meets the criteria on behalf of the JO as follows. A. Conduct the delivery of goods and/or services. B. Receive or obtain income and/or C. Incur costs or pay income to other parties. 1. JOs that are required to register themselves to obtain a TIN and report their business to be confirmed as a taxable entrepreneur. The obligation for JOs to register to obtain a TIN is carried out at the tax office in which the work area includes the residence or domicile of one of the members in Indonesia who is appointed to represent the JO by no later than 1 month after the date of the establishment of the JO, or the JO's undertaking of activities in accordance with the criteria on behalf of the JO, if the JO cooperation agreement does not indicate the existence of such criteria. In addition to the obligation to register to obtain a TIN, a JO is also required to report its business to be confirmed as a taxable entrepreneur in the case of A. The JO exceeding the small business limit, specifically the gross turnover exceeding 4,800,000,000 rupiah for one fiscal year, and/or B. One or more members being confirmed as taxable entrepreneurs. Furthermore, the JO must also carry out the following tax rights and obligations. A. Value-added tax and/or sales tax on luxury goods. For the delivery of taxable goods and/or taxable services carried out by members to a JO and the JO to its customers. Such deliveries are subject to VAT upon the transfer of the taxable goods and/or taxable services by the JO to the customers. For transfers by members to the JO, where the basis of the tax charge is subject to VAT, will use the other values in the form of a contribution value that is agreed upon by each member. A tax invoice must be issued by the member before the JO's issuance of a tax invoice for the transfer to the customers. Meanwhile, for the delivery by the JO to the customers, VAT is owed, and a tax invoice must be issued by the JO according to the provisions of tax laws and regulations. If the JO makes a delivery of taxable goods, which are classified as luxury items, then the delivery is also subject to sales tax on luxury goods once upon such delivery from the JO to the customers. B. Income tax. Income received or obtained by a JO from customers is income for a JO, which are A. Non-final, that is, the income tax rate on taxable income based on the amount of income deducted by costs to obtain, collect, and maintain income, including costs incurred according to the member's contributions to the JO. B. Final, that is, the final income tax rate on a tax basis on which the JO cannot charge any costs, including the member's contribution costs to the JO. In addition, the costs incurred according to the member's contributions to the JO are also income for the members that are recognized when the JO receives or obtains income from the customers. Additionally, if the JO distributes a portion of the profit or remaining business proceeds to its members who are domestic tax subjects, then it is not a tax object. Permanent establishments, then it is not a tax object if reinvested in Indonesia. Foreign tax subjects, then it is an object of Withholding Income Tax Article 26. C. Withholding and/or collection of income tax. If the JO receives or obtains income, makes purchases or imports and/or exports, which is an object of withholding and/or collection of income tax, or owes income tax which must be self-collected, then the income tax is a tax credit for the JO and/or a final income tax payment for the JO. On the other hand, the JO also has an obligation to withhold and/or collect income tax from other parties in accordance with the provisions of tax laws and regulations, except for members' income according to member contributions to the JO, as long as the member is not a foreign tax subject. Then the income tax is not withheld and/or collected by the JO. In addition, there are special provisions for A. The JOs that conduct construction service businesses. The withholding or deposit of final income tax on construction services is carried out using the highest income tax rate from its members. B. JOs that carry out a transfer of rights or CSPA or PPJB on land and/or buildings. The final income tax self-collected by the JO using a tax payment slip in the name of the JO is also a payment for the final income tax of its members. 2. JOs that are not required to register to obtain a TIN and are not required to report their business to be confirmed as a taxable entrepreneur. In this case, a JO only functions as a coordination tool. The members issue bills directly to the customers, and income is recognized by each member. The delivery of taxable goods or taxable services is also carried out by the members to the customers, without going through the JO. Thus, the implementation of rights and fulfillment of tax obligations is carried out by each member. Thank you for listening to PB Taxand Tax Updates.